So could you give us an overview then of your focus and strategy when it comes to making money on your stocks?
Okay, so I guess what we're trying to say there is that I'm, like I say, very much a long-term portfolio, very much spread across a lot of stocks. I mean, I run two main portfolios. The one called what I call my trading ISA, and that is what I call the WD-40. It's got a bit of a ring to it, but that has basically got 40 stocks in it. So you can see there by having 40 shares, some of the position sizes are quite small. Some are like, I tend not to go much less than about 2% if I can, because if you've got less than 2%, there's sort of no point in having it. But I've got a position in a company called Axis Technology, AXS, which is a really speculative one, and that is very unusual for me to actually invest in. But they do like some special wood hardening and things, and I know quite a bit about it, and I've just invested a small bit of money in there, so it's less than 1%, just to get a foot in the door and to watch as progress goes on. And the shares are actually doing okay, and the business is definitely making progress. And my plan there is that if they do move towards being a proper profitable company, I will be adding more money as time goes on. But then I've got other ones. I've probably got say 3, 4, 5%. I rarely let anything get over about 6% of the portfolio, because the danger is you can buy something and have say 2 or 3% in it. It does really well. It goes up and up and up and up and up, and it becomes a big position. And you sort of get overconfident again. You think, oh, this one is done so well. I've got Boohoo. Yeah, I mean Boo. It's been an absolutely fantastic investment. And that one, I've already top sliced it a couple of times. I've chopped a bit off. But you sort of get to the point where you think, oh, Boo never lets me down. It just goes up all the time. And you just get sort of complacent. And you've got to realise that any stock at any time can shock you and surprise you. One got me the other day, SafeStyle, SFE. I'd held it for 2 or 3 years, done really well on it, 100% up or something. And I'd had some nice little dividends. And it came out of a profit warning completely out of the blue. And the shares had just made an all-time high. They'd broken out to an all-time high. So it was a lovely uptrend on the chart. You thought, this is going brilliant. And it comes out of a profit warning. I was like, oh, what is going on? So thankfully on that one, I just sold it quick. And I took a 10% hit. It dropped 10% where I sold it on the day, but I still banked, like near 100% profit. So, it works out really well. But it just goes to show that even ones you think, yeah, this is going great, it's still a reasonable valuation, the chart is broken out, all looks good, it can still kick you in the whatsits.
So how do you select your shares?
Right. My main sort of like, it's almost like I'm alert all the time to possibilities. All the time as you live your life, you're sort of like seeing things going on and whatever. And one of my main drivers is I use Investors Chronicle magazine, which I think is absolutely brilliant. I love it. And what I do there, I love the bit at the back called the company section. And they have like a little strip where it has like company report and like a summary after they've had their results, whatever. And I love reading through those and thinking, right, is this a good company? Is the valuation good? Could this do, would this fit well? Because that's the other thing, it's got to fit well with your portfolio. It's no good having like, I've got like, say, 20 great clothing companies. Well, that's no good because you're just massively overexposed to one sector. So I like to have, maybe sort of 2, 3 stocks that would be the maximum for any sector. I think at the moment I'm actually holding something like 5 clothing stocks, so that was a bad example. But yeah, so I like to sort of like spread things that way. But finding stocks, Investors Chronicle is a big one. The other thing I do find really useful, and this is something I've discovered since I started doing the whole wheelie dealer thing and the website and whatever. I use Twitter a lot. I'm on Twitter a hell of a lot of time. And one of the great things about Twitter that I hadn't envisaged when I started doing it was you get to meet loads of other brilliant investors from all over the country, all over the world. I mean, one of the guys I deal with is in Australia, and it's incredible. But you get to learn loads of ideas, because you see what other people are doing, and it's like they've invented, oh, you know, that guy's in that, and he's a shrewd guy, you know. So that I find really helps. So yeah, you just got to be like open to opportunities really, and just keep your eye on what's going on.